Daily Energy Markets podcast, where each morning we reflect on the open in Asia and the direction of travel for the day, for the week, if we're so brave. Markets opening in Asia this morning, a little bit soft, a little bit down. The infamous Reuters headline blames it on the fact that China has released again some strategic reserves in fuels, and perhaps that's having some downward pressure on the price. Let's kick off this morning, as always, Monday morning with Omar Najia, Global Head of Derivatives at BB Energy. Omar, you've been telling us for a few weeks now that this market feels like it's capped out when it went above 85 on Brent. Is that what we're witnessing now, this sort of difficulty, this sort of slow trend down from 85 on Brent?
No, I think basically on the balance of probabilities, I think we still have one more kind of push higher. But again, I think people have made their money, and I think you'll see you still need I think you still need one last push higher for people to actually sell. So oil basically always forms inverted V tops. It doesn't do basically like sideways for a while and then ease down. It does a very sharp up followed by a very sharp down. So we haven't seen that yet. That doesn't mean that it always needs to do that, but historically that's what it does. So I'd wait for a push. I think we have a good chance of getting to 90 WTI, something like that, and people I think start selling there. But again, I don't think it's massive kind of risk reward kind of thing. I wouldn't be. It's always nice to kind of sit back and watch, and I think that's the way to go right now.
Sit back and watch, the luxury of such a thing. Let's go to New York, or not to New York, actually, to get to Florida. I have to adjust my geography for Mike McGlone sitting in Miami. Mike, Senior Commodity Strategist at Bloomberg Intelligence. Mike, I'd like to just kick off your views on one of the things we thought may lift the market a bit was the U.S. government finally getting across the line with the Biden spending bill. That seems to be struggling. He's looking a little bit like a weak duck at the moment. Your thoughts on his posture, his success or failure, and its impact for the markets?
I'm impressed with the pressure on OPEC. So I think that's going to continue to increase supply. Biden, I think, is fine. It's just part of the negotiation of government and the discourse. So the infrastructure bill is going to go through, maybe not as much as he wanted, but it's basically already done. Now that's decent amount of demand, but I would say that's more bullish for copper than crude oil. And I agree with Omar. The key thing I'm fixated on when I publish my monthly outlook for crude oil is the inability of the DEIS contract, DEIS next year, DEIS 22, to get above $72 a barrel, despite the front contract pushing up above 85 in WTI. And I think that's the key thing. I don't have any reason to dispute the curve. And I think that's what you're going to see from the U.S. You're seeing it's delayed, but pretty substantial supply elasticity kicking in and some demand destruction. One thing the market's going to look forward to is 100,000 Teslas coming next year. That's just the big picture. We're not using as much liquid fuel as we have in the past, and Biden administration is really accelerating that. And we have this election coming up. So in the big picture, 100,000 Teslas is something to remember from a demand standpoint. That's just going away. And in the shorter term, Biden needs to get elected, and that's 1 month away. You mentioned November. I'm sorry, 1 year away. And having the U.S.
Well, it's a few hours away, isn't it, of the Virginia and New Jersey elections?
Well, there's a good example. We'll see how they flip. But typically, typically the whole goal is for the Democrats to maintain power. But that's the key thing. Having this tax on government, on people spending with higher crude oil is not good coming a year from now. So I suspect we're seeing, as even on your headlines, you're seeing a lot of that classic case of the cure for higher prices is kicking in.
I've always, Omar Obeidly, that is, rather than Omar Najia, I've always looked forward to Monday mornings when, by coincidence and serendipity, Mike McGlone and Omar Najia are on at the same time, because it's always been the great bull versus the bear. And Mike said he agrees with Omar Najir this morning, and that's not good. So Omar Ubaidli, that puts you in a very difficult spot to be the contrarian this morning, Director of Research, Bahrain Center for Strategic International Energy Studies in Bahrain. Omar, one of the things I've welcome your thoughts on, Mike touched on it briefly, and that is the Biden call on OPEC to do something, getting a little bit frustrated in his language. How should we read that? I mean, Saudi Arabia saying no, no, and no again to the US president is not always the right move. What's your reading on it?
So, I mean, first of all, I think it's time for the US and Biden to sleep in the bed they've made. They've surrendered leverage over these sorts of organizations through 20 years of disparaging comments and gradual withdrawal and so on, and they pretty much hung Saudi Arabia out to dry in the last 24 months. So I think that two things.
Yeah, but I mean, let's call a spade here. I look out my window, I still see the Armada.
Yeah, but it's that's something in terms of, I mean, I don't think he'd actually escalate to the level of a security withdrawal or something along those lines.
Yeah, but isn't that the big quid pro quo?
The quid pro quo has changed. It used to be security on a much larger scale in exchange for keeping excess capacity such that to avoid oil price spikes. Once Obama came in and shale oil, and with its flexibility and with the increased domestic production, since then it's been a decrease in the need for that. And in addition to that, the US is, its relationship with Israel has changed, its relationship with the whole Middle East has changed. So it doesn't need as much from the region, and I think that's going to be the long-term trajectory. At the moment, temporarily, there's a need, but I think both sides are quite happy to ignore. I mean, Biden will call for the decrease in oil prices. OPEC will ignore him, and everybody will just continue as things were, because it's not worth changing the way that overall relationship is going on, which is something which is manifestly a temporary state of affairs. 1 year from now, I think all this will be in the rearview mirror. So Biden's more, I think, speaking to his electorate. It's an easy political point to score when you can just blame things on OPEC. God knows every US president has done it for the last 40 or 50 years, and OPEC doesn't really care if it gets that negative flack.
Omar, your favorite subject, COP26, that's Omar Najir on this case. We're not even 24 hours into COP26. It already looks like a damn squid. We thought going into it wasn't really having ramifications for the markets, but the fact that it may end up being, not delivering in any robust way on transition could be bullish for markets. Your thoughts?
So basically, I read today that when Biden went to meet the Pope, they have rules now.
It really sounds like the first line of a joke, but nonetheless.
No, but they have rules now how many people can be in the cars, apparently, in Italy or in, the Vatican City, whatever. So Biden had a motorcade of 85 limousines going to meet the Pope, 85 limousines. And then after that, we're going to go, by jet. And we're going to go discuss how, the advanced world is going to do like green.
Come on, he can't get on a horse and cart and go to COP26 for God's sake.
But it's hilarious. It's absolutely hilarious. And then they
it's the wrong optics, certainly.
But I mean, and then they tell people like, don't eat meat. I mean, you can't eat meat. What's the matter with you? You're killing the planet. And then you have an 85-car limousine, motorcade. I mean, it's ridiculous. I don't get it.
But let's come back to the base of, does the oil markets care what happens in Glasgow this week?
Well, look, I think that also, no, they don't give a damn, basically, because they've already been pronounced as like enemy number one and all this kind of stuff. But how will people feel? You've still got to pay for COVID at some point, and you've still now got to pay for this green energy, quote unquote, transition. And green energy has no redundancies in it. It's difficult to store the stuff. It's difficult to transmit the stuff. It's just a complete and utter disaster. And you have people like Boris Johnson go on and saying, calling Putin and saying, you got to do more and all this kind of stuff. It's ridiculous. And then you go to the third world and you tell the man, you're mining, nickel and cobalt and all this kind of stuff. What are you doing to the environment? sell it to us. You can't sell it for as much as before because we're going to make it into batteries and all that kind of stuff. So, I mean, this is all kind of extremely transparent, at least to me. I don't see what this whole idea about green and all this kind of stuff. It's not that it's not going to happen, and it's not that it's not a good idea, but the way they're doing it, we've got to be net zero by 2030, 2050, don't eat meat, live like a vegetable, all that kind of stuff is ridiculous. People won't accept it.
6 months ago, Mike, it looked like oil may be ready to go the way of the stones in the Stone Age. It feels now on the day of COP26 that the opposite is the case. That it's nearly a second lease of life for fossil fuels, with many acknowledging that the transition isn't going to be there. Your thoughts on where COP26 impacts the markets on the short term rather than the long term?
It's insignificant. It's just politicians posturing for votes, and so I'm not worried about that. I just, like Omar Naji said, it's nothing, and I really appreciate what Omar Al said. It's you have to look. It's a year from now that really matters, and what we're going to be looking at is this futures curve has to ride up the curve. We're going to be looking at prices at the upper end of the range in the last 7 years, and all these supply and demand elasticity things kicking in. So I'm not concerned about the COP26 at all. The main polluters aren't there, but it's just political posturing the way I see that. It's the actual supply and demand that matters in the big picture, and there's still pretty good supply out of OPEC. Should we fully expect that continued discipline? That's unlikely, but just look at profits. We know what that does for people. And there's some massive profits in Texas now. There's profits from Saudi Aramco. You see it all. I see it. For me, it started in the grains from a commodity guy, and there's just U.S. farmers are making too much money now to not supply. That's just the way life works, and it usually starts in the grains because it's more, you can bring on supply in 12 months easy, but in crude oil. So I'm sticking with the big picture, and shout out to Omar Naji. I mean, it's a rule on the trading desk. When you have someone have a hot hand, you stick with them, and he's had the hot hand. So I'll stick with Omar Naji. But I look at the big picture as, if crude oil is at this price a year from now, that's a significant statement. That means that the old forces of supply and demand elasticity have changed, and ESG is kicking in. I think that's very unlikely.
Omar Obeidallah, we do have a big sort of event this week. Perhaps, I mean, the Fed is going to finally announce its decision to taper. At least that's the overwhelming expectation. Again, like COP26, does it matter? What's its impact?
I think that in terms of the short-term impact, it's not going to be big. What's more important is the long-term impact, because what people are trying to get a read on is, what is going to be the future of monetary policy. In particular, one of the bizarre turns that monetary policy in the US at least has taken in the last 24 months is that the Fed has decided to take responsibility for the environmental agenda, for social justice, for all sorts of for minimum wages. The Fed has now taken charge of the entire economy, or at least in terms of its official goals. And this is bizarre, and to be honest, very unproductive, because you want your monetary policy agency to be just focused on controlling inflation. Now, the question is what we're going to discover in the coming weeks is the Fed going to snap out of this and realize what its job is, because inflation is rising. And I think it's safe to say that things like pursuing social justice should take a backseat to making sure prices are stable. So are they going to snap out of it and do this, or are they going to continue with this bizarre melange of and policy creep, ushering in this continuing this era of policy dysfunction in the US? So I would say that people are looking very carefully at what the long-term goals are of the Fed. I think everybody has had enough data on inflation now to realize that this is not just some sort of transient 2 months, 3 months, and ignore it and it will go away. There is a desire in the markets and desire from economists that action be taken. Will they have the guts to do it? We will see.
Omar, we've talked about, you think of that surge, you still expect perhaps a final surge to 90 on this cycle, WTI that is, which would be a big jump from where we're at the moment. Where does China play a role in that? We're still seeing weakness there. The PMI numbers coming in still sub 50 on the manufacturing, although a little improved on last month. Your thoughts on the role China has in making that last move up to 90 possible?
So look, incremental demand comes from China and all that kind of stuff. But I think when it
Yeah.
comes to China, all the news that we see is through a Western lens, right? So they're bad. Everything they do is, cheating and stealing and all that kind of stuff. And then you had the Evergrande thing, which is going to destroy, I don't know what, and it's going to collapse and blah, blah, blah. And then, everybody kind of ignores everything. China keeps growing more than anybody else. Arguably the biggest economy on the face of the earth, and will continue to grow much more than the US and Europe and all the rest of it. And, you see that the geopolitical power is shifting to the east, etc. So we don't have a good handle on what China actually is or is not kind of doing, because we see it through a kind of colored prism. So,
Well, their own prism is, growth is slowing down, right? Generally, they're announcing lower numbers. They used to say 12%. Now they're saying 5%. Whether we believe them at 12 or we believe them at 5, that's what they're saying. So their own prism is slower than before.
Yeah, but the bigger picture is, you have to remember that they've been growing at massive numbers for decades. So, it's like, so they were like level 1 30 years ago. Now they're 30. So 5% of 30 is still, bigger than 20% of 1. So, no, I think basically, I don't think that the markets look necessarily at kind of, what China's doing today or what they said about their PMIs tomorrow. It's more about kind of, patterns and that kind of stuff and the mood of markets. So I just think that as we come towards the end of the year, you probably need one more kind of final kind of, euphoric kind of thing. And you need something for people a reason for people to start selling. Now, there isn't much. But when oil drops for quote unquote, there's no news and oil drops like $3, $4, $5, $6, $7, I think people will start to kind of stampede in. But there's no need to kind of front run the market and pick a top. Like I say, it should be V-shaped, and it's going to happen on the back of no news, and then people will start searching for why did it happen, all the rest of it. But I think it's coming. I think it's coming sooner rather than later. My own view is it gets 90, and then we see it turn, as opposed to turning right now. But again, I think people who've made the money have made the money, and it's not the time to kind of be long and bullish and take positions into 2022. It's not to say that it's impossible. It's just less probable, basically. So I think more probable is we see it up in this market soon.
Mike, your thoughts on that this week, tapering finally coming into life, if indeed all the expectations are true. The Fed meets on Wednesday. Does it signal a turn in this market, in this sort of ultra soft accommodative period for the last 18 months, the Titanic is turning?
Tapering is a fallacy. The minute the stock market goes down, the Fed's going to just keep liquidity and turn it up so much. It's just completely dependent on the stock market. And I really appreciate what my colleagues said there. So let's remember, from a commodity standpoint, the Fed has complete reason to ease. Let's look at WTI crude oil. It's the first time it reached this level was September 2007. It's down like 13% from that level. I look at CPI. If it were just to catch up to CPI, it'd be about $125 a barrel. So the key thing to remember from commodities is rapidly advancing technology, bringing on more supply, reducing demand. And that's the key thing from the Fed standpoint. There is no, we're having a short-term blip. Yeah, we have inflation a year from now. From a commodity standpoint, like I come from the Corn Belt. Corn is the same price as it was 12 years ago. Even copper is the same price as it was 11 years ago. That's deflationary in an environment where you're printing unlimited supply of currency. So I think the Fed's going to be fine. They're not going to matter. It's just, they're going to just keep adding liquidity. Every single time we've had a crisis, rates go lower, and now we're at zero. And I don't see why the U.S. shouldn't catch up to the rest of the world and have negative rates. It's something I learned trading JGBs 20 years ago. So I think the key risk is what we've been pointed out in crude oils. Yes, we've had the escalator up, it's elevator down risks. And if the stock market drops just 10%, oh my gosh, we haven't done that in a while. The Fed's going to just go right back to massive liquidity, and they're leading the world that way. So this is a dream scenario, and all depends on the U.S. stock market staying elevated. And that's just a fact. We haven't had a 20% correction since the low last year in equities, and the market's getting too accustomed to just free money. Market's going straight up. So I'm and the Fed knows that. And the thing is, they're going to have a tricky game of playing that tweak.
Omar, just to go local, Saudi Arabia recorded a budget surplus for the first time in the third quarter of this year, obviously on the recovery of crude oil prices. Just from a regional point of view, what does that mean for the fiscal health of obviously the kingdom and others? I mean, a year ago, you would have bet your house they wouldn't have got here.
So very briefly, just regarding what Omar said on China. So that Chinese growth, going back to your earlier question about the US's armada that's in the Gulf, one of the biggest factors why the US will continue its presence is that China continues to grow. And the best leverage, or one of the best sources of leverage that the US can have over China, is controlling the energy supplies that in the Middle East that China so desperately needs. US has been muscled out of the South China Sea in those sorts of areas, whereas in the Gulf it's still top dog. And no matter what its antipathy towards Saudi Arabia, it still wants to control that oil and that gas, and it's not going to surrender that anytime soon. Regarding the budget surplus, it's definitely a positive step, but there are certain aspects. So the particularly encouraging part of it is that it was mostly driven by non-oil growth in the economy, as well as increasing tax revenue, decreasing subsidies. So Saudi Arabia has restructured subsidies and taxes significantly. You may recall that went from 5% to 15%. Subsidy allowances, I think it was plus living allowance was cut. So this restructuring is going, and at the moment, at the very least, it seems to be, although one would have imagined considerable political barriers and disgruntlement, none of that has materialized. So these are all very, very positive steps. And I would imagine that other Gulf countries will be following and imposing similar reforms if the ones in Saudi Arabia continue to prove fruitful. The question is, however, how much the non-oil sector will grow, will be growing 3 or 4 years from now. Is it that we're merely seeing a one-off, a level shift where the economy structures from one format to the other, and then you'll go back to weak non-oil sector growth? Or is there actually going to be a period of perpetual growth in non-oil sector? And what will determine that is the success of the attempts by the government to create a positive entrepreneurial environment in Saudi Arabia.
One of the things we've seen, Omar, in this period has been the sort of growing competition between Saudi Arabia and the UAE. It's sort of been a feature of this COVID cycle. We saw it in OPEC. Now we're seeing it on the sort of fiscal, the sort of more general economy side, in terms of Saudi Arabia sort of instructing international companies they need to headquarter in Saudi in order to win business and so forth. With Saudi coming back to a fiscal surplus and looking stronger on the fiscal side with the recovery in oil prices, would you expect their robust posture to recede a little bit or to accelerate further?
No, I think that, first of all, you have to remember that when you're talking about Saudi Arabia and UAE, both of them, their market eventually is really something much more beyond the region. So their primary competitors are not each other. Saudi Arabia wants to attract religious tourists, Muslims from all over the world, and those are not the sorts of people that are going to be into the UAE, and vice versa. UAE wants to attract rich property tycoons from all over the world. Those are not sorts of people looking to move to Saudi Arabia. And they're not just looking to get regional hubs, they want global entities. So really the competition between Saudi Arabia and the UAE in the long run is just a bit of a red herring. They're both trying to do, and they both want to get something from the global market. Don't worry about the rhetoric and some of the micro policies. In general, they're not going head to head, and they both benefit from the other economy being big. You want to have, France wants Germany to be big and strong economically. Germany wants France to be big and strong economically, setting aside. Now, in the long run, in terms of in answering your question, I think that Saudi Arabia will actually, on the contrary, it will double down. It will say, look, we're getting returns. This is working. Let's continue doing this. And the reality is that with all the nonsense that's going on in Western Europe and USA in terms of economic management. To be fair, I think it's going very poorly. Investors all over the world are looking for good returns, and Saudi Arabia, whatever one's views on the domestic politics, offers good returns. They have a large economy, they have a lot of space to improve, and they're offering what is increasingly attractive environment for investors. So I think they'll continue along that route, and the UAE will continue down its route, and they'll both thrive.
And may the best man win. Let's go to the survey question and see what the room's view is on some of these themes. The Fed is widely anticipated to announce on Wednesday that it will begin to wind down its massive monthly purchases of bonds and securities, 120 billion a month for the last year and a half. Should oil market bulls worry about tapering? Should oil market bulls, not bears, should oil market bulls who've been driving this bus up and up the mountain worry about tapering? Yes or no? And let's go to the room to look a little bit in the week ahead. Omar Najia, back to you where we started. Oil markets open in Asia a little bit down. I'm curious, you're still calling a 90 on WTI as a possibility. That's a big jump from where we are now. It doesn't feel like that's a kind of, we're near the top of this market. That's still a significant leap. What would get us there?
Euphoria, basically. So like we've been saying for a while, right? So when everybody, I think people now want to start, they see all these stories in the news, and it's going to be cold, and there's shortages, and the gas price and coal prices and green and all the rest of it. These news stories, very interestingly, they drive the last kind of euphoric phase, but they always, or almost always, appear at the tail end of a move. They don't happen at the beginning. At the beginning, it's all doom and gloom, and we're never going to get above 40 and all that kind of stuff, right? At the end, we're going to get to 100, and next year is going to be 10, the winter, and so I think that's where we are right now.
Does the calendar year, Omar, does the calendar year play a role in this? The fact that we're coming to the end of this sort of 12 months, and there'll be people closing out positions, want their annual bonus. I know you've got your eyes on a few pretty juicy toys for Christmas.
So yes. So, but I mean, markets are all about patterns and it's all about moods, right? So basically, when you come to Christmas, people are generally happy and upbeat, and all this kind of buy it and all this kind of stuff, right? And then after Christmas, you get the what have I done and really and all this. So I think it's mood driven, it's euphoric, it's happy, it's look at how much money I made on the S&P, and my whatever it is has gone up, I don't know how much, and all this kind of stuff. So yeah, I think basically that's why we have Christmas rallies, right? It's about mood, it's about happiness, about sentiment. So yeah, I think basically the market has a good opportunity to go up, and I think it's because of that. It's because markets have patterns and sentiments and moods, and we get to 90 and then fall off a cliff kind of thing. And happy birthday.
With that big credit card bill in January. Mike, back to the reality of non-Santa Claus is the things impacting the oil markets, such as the price of LNG. We've seen that the switching from gas, particularly places in Asia looking for cheaper fuels to drive power. Does that continue to be an impact, an upward motion for oil, do you think, going into the end of the year?
Very unlikely. Gas needs a cold winter now. It's priced for the cold winter. That's not a good thing at the beginning of November. And in gas markets, we've learned this lesson. At $5, the average cost in the U.S., this is almost 3 times the average cost in the U.S. And there's been a lot of supply just waiting to come on. They've had the best incentive in almost 10 years to do that. And that's showing up in the curve. You have look at the forward curve. Front gas is over 5. And the backs a year from now, which is the key thing to think about, is around 4. So I think that's going to play out. And I think the key question we need to ask ourselves is the things that have pressured energy prices since the peak in 2008, have they changed significantly? And I think, no, this is a short-term blip. And in the big picture, we're going to all realize that this was a short-term blip and just made us realize in a good way that how important fossil fuels are for our economy. We're getting to this new world of clean energy, but it's going to take longer than most people expected.
Let's get the survey result and give Omar Bahrain the final word today. So no, should the oil market bulls worry about tapering? A big whopping 76% of this room says, no way, keep the party going. keep the punch bowl in place. Omar, I welcome your thoughts just as a wrap up. In the news noise this last weekend that we've just come through, Iran, Saudi Arabia sort of back in the noise box. Will they, won't they reconvene before the end of November? Your thoughts on that, the outlook for it? Are you optimistic? Does it matter?
No, so first of all, in terms of the nuclear deal, I think it's dead in the water. I think that's just that you can just put a fork in it, as they say. In terms of Saudi-Iranian rapprochement, I don't think that anything significant will come out of it, because the reality is that Iran is not able to give, and not willing or even able to give Saudi Arabia the assurances it's looking for. Saudi Arabia ultimately wants Iran not to interfere, what it regards as interfere in other countries. Iran wants to continue interfering as it sees it in other countries, and there may be a bit of dressing around that, but really they can't get around that impasse, and it's going to take both sides some more time to get used to the new status quo without the US before they come back to the table and actually reach an agreement on anything of substance. And that includes, I think, the issue of Yemen. I don't think that's going to be resolved anytime soon, with or without the intermediation of the Iranians.
Well, let's wrap it up there with Brent at 83.46, a little bit down on the open in Asia. Nothing really moving this market. Feels a little bit like it's in the doldrums, looking for some wind to blow from somewhere. Will it come from OPEC this week? We didn't even mention OPEC. Once again, the months roll around. OPEC Plus has another meeting. Seems like they're locked in their 400,000 barrel a day per month increase. Nothing to shift that, but who knows? Maybe a surprise. You know, if Biden keeps ringing, maybe somebody will finally pick up the phone, but won't hold your breath. Omar Najia, as always, thank you very much from Dubai. Mike McGlone from Florida. Omar Al-Ubaidli from Bahrain. Really appreciate your insights this Monday morning where the oil markets are sitting a little bit soft. All the best. Have a great week. Thank you.